Hello, Warriors. How's everyone doing today? Hi, Patrick. Patrick's always there to say good morning to me. Everyone doing okay? Hello, Amanda. We have a special treat. JT from our chat room is going to be my guest today. So stick around to hear about JT's journey and his experiences here at ForexAnalytix. So just a quick couple I told you so. It's my turnaround Tuesday. Candidates were the S&Ps here at 61.8. Of course, I had no inside info that Gary Cohn was going to surprise the world and resign yesterday. Okay, I think it's a very important resignation. The market thinks so too on this candle. We're trying to recover here, but to me it looks just like a flag that's developing, because Wall Street lost their best friend in the administration. And then if I want to drill down even further, Gary Cohn being from Goldman Sachs, that the banking industry has lost its best friend in this administration. So I think it's more than a one candle wonder here. And in fact, if you look at it on a little longer time frame, you could almost say that off this break that we've had, some type of flag was developing here. I think it showed up better at on the one. That this action from Friday was kind of a flag. Now we're getting a smaller flag. And actually, the measured move takes you back down to the November lows. Excuse me, February lows down here. So we'll see if we get any kind of follow through. We're getting a little bit of a recovery off the surprise, a shock to the market, but I'm not impressed. It looks like ABC, a flag. I think Steve would call this impulsive. Greg would call it impulsive. And all of these, this has really been corrective from Friday. We've had a couple Friday graveyard saves by the plunge protection team a couple of weeks in a row, and each rally is less and less, right? Because the first save from the down here, this was on a Friday, you know, it lasted for weeks, right? Look at the magnitude of it. This was a big save, happened in the last hour and generated one heck of a rally, more than 61.8, almost 78.6. So then we started to fail from here yesterday, right here. And this bounce, look at the magnitude of this compared to this. Much smaller, doesn't have the same type of momentum. All we did was come from oversold to neutral. So pretty negative on it. And also, which didn't pay as big, was the short in oil, which is trying to come back here. You know, I'm a big believer in stick with what got you there. And last week, talked about being negative crude in S&P's big break, thinking that this high is going to contain any bounce that we have here, and we're going to retest the lows and I think see some type of prints back in the possibly all the way down here, re-challenge the 58 low, which was, you know, right around the same time that the S&P's bottomed. And for you crypto fanatics, I think yesterday was a pretty negative day. Really, the only crypto that was performing over the last, say, month has been Bitcoin. You know, Bitcoin's been trying to advance. We talked about it down here at 6, but at least we advanced to new highs. While if you look at the two relatives, Ethereum, it didn't have any kind of rally to challenge this high. Litecoin didn't have any kind of rally to challenge that high. So with the leadership now under pressure, to me it looks like still negative. I know a lot of people are looking for sharply higher. Saw Tom Dreyer on CNBC at the crypto conference, and he's so bullish. And who am I to question him? He's a multi-billionaire. He says we won't be using fiat currency in 5 years. You'll go into Starbucks, lay out some cash, and they won't know what it is. That Bitcoin will be the standard bearer. I just want to show you guys something here. And I know it sounds ridiculous, but I have some long-term moving averages in Bitcoin that take it down to the 2000 level. Down there, I might, check into getting a wallet. I don't know if it'll be brown or black or leather, or I can't even put it in my pocket, one of these wallets. But it sounds far-fetched, but it is possible. So these are some of the things I'm looking at. Of course, we had a very big rally in the metals, and they still look okay. Grega caught that. They're trying to pull back here today, but I think it's just most likely a break to buy. We're on the verge of breaking out. In fact, silver acted a little better than gold, but today it's back to its old tricks, contained at the 4-hour. Personally, I'd love to see one more washout in metals because I'm stalking some gold and silver mining companies that have been underperforming the metal, and a few of them really had a heartbeat. So I'd like to see one more washout. Maybe it's possible that everything, crude, S&Ps, crypto, have another 1 or 2 week washout into, the middle of March, late March, early April, where all these markets deflate, and then we'll have lots of buying opportunities at that point in time. But right now, it's hard for me to want to be long anything. Okay, so stick around for JT. I don't know JT well. I will after I talk to him. I'm going to grill him. He's a panelist. Are you nervous now, JT? You're going to be grilled. If you have a hot white light wherever you're working and hanging out during the interview, please shine that directly on your face. And with that being said, one more thing I wanted to talk about that's manifesting, and we talked about this over the last several weeks, and it's euro pound. I always had a bias to the upside, although when I saw euro weakness and cable strength, I said get out of the way. But I talked about this. I believe there's some people that'll remember that I thought that we had an incomplete pattern here on the weekly in EG. So now we're starting to break out. We'll have a breakout over 90. I know some people are looking, that I respect, are looking to fade it at 90. But I think this would be a classic 1, 2, 3 taking out this high. And this is what I'm going to be using up here. If we get up here, I'm going to be using this for like probably the top of euro, maybe 127-ish, and the beginning of a big dollar rally. So I think the dollar bottom and the euro pound top will come in close together. In fact, I'm going to use EG to time for a dollar bottom, looking for this high to be taken out, trading 93.94. So you guys don't have to agree with anything I said, but I do hope you understand the rationale and that you could kind of see why I'm looking at what I'm looking at. And maybe you're learning a few things along the way during my commentary. So all I ask for now is a why if you got it, not if you agree with me, because that's what makes a market. Disagreement, that's what makes it such a great game. Okay, Patrick's with me, and Kareem agrees with most of it. Cool. Now I'm worried. Oh, too many people agreeing with me. Okay, reverse everything I said. I'm just kidding. That's how I was when I was in my early 20s. I couldn't be on the same side of a trade with anybody. Okay, so let's bring Blake in. What do you say? How are you, buddy?
Hey, what's up, Dale?
How are you, man?
I'm good. I'm a little surprised. The lack of follow through the FX market has seen based on the Gary Cohn resignation.
Yeah, it's like it's comatose, huh?
Yeah. I mean, you know, I had anticipated the dollar would get absolutely smashed, and I traded yesterday evening, and you know, I was in the chat room trying to manage between being a father and a husband and trying to trade this this mess. I had to take you know, the kids over to go get some school clothes because my kids wear a uniform, so they grow like weeds at this age, you know.
Yeah.
But I was in the middle of trying to trade this as it was happening, and I got to the computer a little bit late after the announcement. So here's the dollar yen. You can see the fall in the dollar yen, and I got to it maybe about 15 minutes late. I was in the other room just doing some things around the house, and then I looked at my phone. I'm like, oh, what happened? My phone was blowing up. You know, alerts going off and blah 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 and everything. So I ran over and I shorted some dollar yen, shorted some Aussie yen, shorted some New Zealand yen, bought some euro dollar, and I ended up making money, but I was so surprised that the dollar yen held these lows, and so there's something to be said for that. That the dollar yen is actually holding up right now, but you know, at the same time, I have to imagine, and by the way, I have aside from a little euro Aussie long, I've got nothing going right now. I'm just kind of waiting to see what happens, but I was very surprised the dollar yen didn't go much further. And then what I did is I put an order in to sell the U.S. dollar Japanese yen. I was telling the guys, because we all jumped online. I say we all, the guys from my office, we all jumped on conference, and I said, I'm surprised the dollar yen isn't selling off. I'm going to sell some dollar yen when it gets to 105.85. And I got triggered right here. I said, you know, this is, you know, I was like, man, it's holding up. I'm like, I'm going to cover my dollar yen shorts. I'm going to put in an order to sell at 105.85 when I'm off to the store. And I'm like, I can't see any reason for us to really be rallying back other than, you know, this is pretty big news. But, you know, I was assuming that people would have got caught short here. And so I triggered in the trade and I got back and I closed it out at like 71, I think is where I closed it out. Went to bed last night and you know, made money a little bit, not a ton, but you know, where I wanted to get in, I got in, and then I closed it out and I said, okay, well, that's it for the night. I just had imagined that I would get up this morning. I'm like, okay, well, we're probably gonna see some follow in Europe. I bet I get up in the morning and the dollar actually breaks through 105.50, you know, down to like 105 and a quarter, and maybe even lower. And it didn't, and I'm surprised. And getting up today and looking at market where it's at right now, I'm just very, very surprised that we have not seen any downside follow through. There's a few reasons why this is such a big deal, in my opinion, for the market. It's because, you know, Gary Cohn he's the guy that I think from an economic standpoint really was the one guy that could talk Donald Trump off the cliff in some of his decisions that, you know, might feel as a little off the cuff and erratic, where, you know, Gary Cohn would say, hey, you know, the market implications is this. Let's reconsider what you're wanting to do here because it may affect the stock market this way, that way, and the other way. With I could call it voice of reason. Here's our ADP. Damn it, I just missed ADP. Sorry. ADP came in line. It came in line. So sorry, I totally was not even thinking about it.
You know, Blake, I think this is the first time in many administrations that there hasn't been a Goldman Sachs presence anywhere in the West Wing. It's been a long time. Everyone's had some kind of Goldman guy in there.
Yeah. Hey, wait, I'm sorry, Dale. ADP did come in with an expected 230,000. I was looking at previous 234,000, but actual market was expecting 200,000. So it's a little stronger than expected for the dollar. Sorry about that. I had to interrupt because I was just looking at ADP and I was staring at the wrong column. Huh?
I'm just talking about history. That's important right now. So, you know, but I do think it's interesting, no Goldman Sachs influence in the White House. And there was always someone there, Robert Rubin. I mean, I could go down the line, you know.
Yeah. Yeah. So on really fast. I'm sitting here trying to think of what I want to do. I'm almost going to sell the dollar yen right here, but it's like I'm kind of looking at this as a gift to sell into.
Well, why don't you concentrate, and I could, Steve and I could take over. How about that?
No. I sold a little at 82, just to have a little bit of exposure to dollar yen, just in case we turn lower from here. Not anything too aggressive, just having a little bit. Just because I look at the stock market, and the stock market has recovered a little bit overnight. You can see the S&P. I mean, we're good.
I love watching you trade live, Blake. And that's another edge that the people have in the member chat room. They see you trade live all day long.
Yeah, they do. And I'll tell you what, I'm not the best trader in there. There are some really good traders in that chat room. I'm kind of I don't stick around as long as some of these other guys and gals do. I like, you take somebody like Amanda. She's great. And I was talking about this yesterday, and I'll reiterate what I was saying yesterday. I tend to be a little bit quicker on the trigger nowadays than I used to be. I'm trading much bigger amounts than I used to be, so because of that, I don't stick around long in a loss, and I don't stick around in my gains as long typically. And some of these other traders in here are really, quite spectacular in their abilities. But I'm just using this resistance in the dollar yen to sell against. So that's really it. And I think stocks are probably going to come off of whatever levels they are right now and revisit these lows going into the open. Now, I wanted to go back and talk about a little bit about this Gary Cohn situation. Again, we are inching our way, maybe even stepping our way, maybe even running our way into a full-fledged trade war. And without Gary Cohn really in Donald Trump's ear, I'm a little fearful that this could become a bit of a reality, and rather quickly too. And so with that being said, I think we need to be, very careful. And I think the stock market is going to, probably not take too kindly to this over time. I would imagine that stocks are probably going to be struggling. And the dollar, it's yet to be seen what the dollar is going to do here. But I think the dollar initially, at least the initial shock, is going to be a weaker dollar, and so longer term, I think that the dollar bearishness is probably going to stay in place. And this dollar yen starting to pop a little bit. And by the way, I don't mind being short the dollar yen, even if it comes up to 90, 92. It's not really a big deal to me. But anyway, going back to what I was saying about hold on one second. The news overnight, I think, is a big deal. And there was another headline too, regarding China's tariffs as well. U.S. said to consider broad curbs on Chinese imports and takeovers. Those are all big protectionist, types of headlines that have come across, and that, like I said, it's going to be fairly, I think it's going to be negative risk. So you've got to be careful. I think you're seeing maybe, the stock market bid up this morning, from the lows, as traders maybe got a little aggressively short in Europe or in Asia. But the chances of us revisiting, our lows from overnight, I think are quite high. And I'm going to just what we have here in the S&P, and this is the 4-hour chart, so you can kind of see this. I'm going to redraw this, and I think we can just kind of draw the trend line that make it look something a little bit more relevant to what we're dealing with at the moment. If we break through the overnight lows in the S&P, I think it's going to be a pretty bearish event. So that's why the open is going to be pretty important today as far as equity go. Let me see about euro dollar. The euro dollar, we closed around the 618. I had a small euro dollar long overnight, and it wasn't even really worth talking about. I took it off the table. And I'm looking at the euro again, and I still think the euro dollar goes higher. I'd like to see it actually revisit here at the 123.60 before moving higher again. I don't know if that's really going to be the case. Boy, this dollar is actually pretty well bid at the moment. This dollar is actually looking pretty good. Hold on, let me take a look at this dollar yen here. I don't like how this dollar yen is pushed up like this. Stand by. See, I cracked that trend line here. I have to cover that on a little bit of a dip. But overall, I still think the dollar yen's going lower. I think this is just a little bit of a squeeze from the overnight. People that were short, maybe an Asian trade, are getting squeezed out here. But overall, I still think that the dollar yen is moving lower longer term. But a break below this 105 and a quarter. I'm surprised we didn't take it out last night, and I'll be really surprised if we don't go down there and revisit that area here over the next day or two. But with ADP, it's keeping the dollar relatively bid at the moment. And stocks, actually, look at stocks continuing to here. Look at the equity markets. We're continuing to push up. There's the Dow. Here's the S&P. Let's see how far this S&P can go here. This is very interesting. Let me take it over to a 15-minute chart. We're about the 50% retracement. Yeah, I don't think we've got much more. This is probably just a little bit of a squeeze, and for those of you that trade equities, you probably look to fade the equity markets fairly soon, I would think. Anyway, there's a few things that I'm looking at there. What else did I want to bring to your attention really quick? Oh, you know what I'm really surprised about? Dale, you were talking about the gold and the silver market. Take a look at gold. I sent out this chart yesterday, actually the front and the daily, because I did the evening analysis last night for ForexAnalytix. We came up and tested the underside of this broken trend line, reversed. You can see it in the daily, same type of thing. But I think the gold actually will eventually break higher. And take a look at silver. Silver had this little triangle pattern. We broke higher. We stopped at the 200 moving average. If we can clear this 200-day moving average, we get above 17. Silver's gone. I don't really trade precious metals too often, but I think you got to watch silver if we take out the 17 level mark. I think that's going to be
a lot of 1850 counts, Blake, that I've seen.
1850 count. Oh, to move up here. Yeah, I think that's entirely possible. It really is. Now with with all that being said, I'm not going to take any more away from Steve. I know Steve's coming up here in a second, but I want to also thank JT for stepping in today. JT has been a normal voice in our chat room for the last year or so. I would say maybe 8 months to a year if I had to guess. And he's really, I've seen his development just over the time that I've been here in this particular chat room since we opened it up with ForexAnalytix, and it's been really nice to see because I know JT is attempting to transition to trade full time. I don't know, maybe he does trade full time, but you're going to hear a lot more from him in a little while, and it'll be really nice for him to be able to talk about things. And it was very impromptu. Dale's previous interview had to cancel last minute, and Dale stepped in the chat room and said, "Hey, does anybody want to come in?" And JT stepped up. So it'll be really nice to hear from JT and see what he has to say. So thank you, JT, for doing that. And with that being said, I'm going to pass it over to Steve. Steve, good morning.
Good morning, Blake. How have you been, mate?
Good. My is a little stuffed up, as you might be able to tell, but man, I need to blow my nose. So
it's a usual allergy season for you, right?
It is. It really is. So
you have that in common with Stelios. He also goes through allergies this time of the year.
It's horrible this time of year. Anyway, very, very interesting moves overnight. I'm surprised that the market's recovered the way it has, but I think the open is going to be very interesting to watch today. In my
absolutely,
opinion.
Absolutely.
Stock market open. So we'll have a good next 30 minutes, and you guys have a great trading day. I'll be listening in to JT.
Okay, Blake. Good luck today, buddy.
Enjoy, mate.
Hey, hey, Steve, how are you today?
I'm good, Dale. How have you been?
So I tweeted, I'm allergic to being stopped out. That's my only allergy. And I tweeted yesterday, traders, have you ever noticed you never have enough on when you're right and always too much on when you're wrong?
Yeah, but I think it's purely psychological. You know what I mean?
Yeah, I know.
You always want more when an idea is working, and you always want less when an idea isn't working.
Yeah, because I only I trade ETFs for myself, and I took a position in FAZ, which is a bearish financial, the bank position, and only a half position when the Cone news broke. So I told when I tweet something, I tell myself, now don't just say this to people, but actually do it. And I tweeted that there was a lot of event risk this week, and so reduce position size. But I guess I was wrong. All we have is the NFP, right? I thought we had the BOJ and the ECB, but all we have is the NFP, and reduce position size until next week. Is that when we have the ECB and everything next week, Steve?
I think so, yes. Stelio?
Okay.
Stelios will be back within a few minutes.
Oh, okay.
I usually just check
the NFP
one day.
Is the only red event, right? This week, Friday.
On Friday, and something, I'm not really sure with how things are moving on, and Connor resignation yesterday, and we have a heated debate here about trade wars, etc. I'm not even sure this is going to be at the foreground by then. Depends on how things move, but it seems that the agenda is moving to other things, and I think that the dollar might end up getting affected more by the policies that the administration is going to be taking, or at least is going to be showing intent to take, than if the NFPs are going to be like 20K stronger or 20K weaker. You know what I mean?
Yeah.
So I think we have some interesting days ahead, and I really do see that the seeds of volatility are still there, and I do believe that we're going to have a very interesting year. And I think that events that are ahead are going to be much more important than some of the usual economic news and numbers and how the economy performs on a day-to-day basis, but more of how it looks like the ship is going to be steered within the next few months. So I do remain of the opinion that we're going to have ahead of us some very interesting months, and I do believe that this might be the year that we're going to see some very, very wild moves.
Okay. So
by the way, I think Blake is still sharing his screen. So let me take over.
Okay.
So we can have a look at a few things. Oh, okay, there we go. You can see my screen now, right?
Got it.
Okay, good. So yesterday, Blake already mentioned it. We had, the market reacted very negatively to the news, but this move has mostly been retraced. So I remain of the opinion. I still hold half of my position, and I remain of the opinion that I'm not so absolutely sure that the market will move to new lows. There might be like a tedious period that we might get choppy moves up and down, and I think that the overnight example is telling of that. Obviously, it's very important to hold yesterday's high if we're looking for a move lower, because if the market for any reason today completely dismisses Cohn's resignation and just moves higher as it did the past 2-3 days, I think that's going to be telling that there's some underlying strength which in the short term we have to respect. Blake also mentioned that on the other hand, if we do break below the overnight lows, it means that probably we're going to break below the low that we got in the beginning of the month, which is going to be quite important, for seasonality reasons as well, because that is going to open more of the downside and will quite significantly increase the possibility that we might even be headed to new lows. So I think that seeing if the market will actually respect this 2,643 low in the S&P is going to be quite important. The overnight low is the first step, the first stepping stone to getting there. So I think today we might have an interesting session. On the other hand, I don't know, but I have a gut feeling, an intuition that the market will might like produce what it usually likes to do, which is like fake people out. So if we do see this persistence in bidding the USD yen, which I'm looking at here, and stock despite whatever, I think that the next few days we might have like a little bit of a reversing of the recent moves. Keep in mind that, as we've said many times, the USD yen is currently on a critical zone. It tested the 127.2% extension of the last move higher, and this is also a zone of support resistance in the past. And it's going to be very significant, because if we actually do break below the 105.30, there is like a huge pocket of thin air below and no real support area for like several hundred pips. So I do think that if we don't manage to hold that low, USD yen might actually accelerate to the downside more than people would expect. So quite significant levels to be watching here. Now, having to do with the euro, the Aussie, and the euro pound, because I saw you mention the euro pound, nothing really has changed. The euro remains, it remains like well bid. The pound less so, but still within what looks like a corrective move so far, an orderly corrective move. Now, having to do with the euro pound, because you mentioned it, of course, nobody can exclude the possibility of what you're seeing as a likely free drive scenario, like you want to see possibly a new high from there, somewhere there, and then a rejection, right, Dale? If I understand well.
Yeah, one more high, Steve. Take out the second high. Yeah.
It can happen, but you need to keep in mind that today might be a significant day, because we finally seem to be breaking above this descending channel. Of course, the day isn't over yet, which means that, you know, we should wait for like, you know, the daily close before confirming. But if
the whole rectangle measures that from a breakout. It looks like 90 to 87. So you tack on 300 from this breakout, it gives you a new high, doesn't it?
Not exactly. It's
well, where would it come in at 92.60?
It's
Yeah,
probably a little bit less. Let's have a look at it. So let's say that this is the high here and that is the low there. Yeah, it's going to be, actually, if we take that as the high, it's going to be a new high indeed, because if we take the 200%, let's see where the 200%, let's remove everything else. Let's remove everything else and see where the 200% takes us. Yeah, it's going to be at 94 actually, but only if we take that high. So it's like 94, yeah. So if we take the extension of this range by considering the very, very beginning of the range, then yes, that's the case. It's 94 roughly. So yeah, sure, that can happen. Yeah. The sure thing is the sure thing is the following: we have been trapped in this descending channel since September, right? So yeah. we should. I mean, ideally,
maybe it's a handle of a cup and handle.
Yeah, sure.
It's a big handle for, you know, guys.
Sure, it can be.
Like
it is a big handle, though. It is a big handle. You're right, because somebody can consider that's what you're looking at here. But yeah, the symmetry of the handle is a little bit problematic, I would say. You mean this one, right?
Yeah. Yeah.
So something like that.
Yeah.
Yeah. Okay, it can, but you know, we need to see like a really strong move from this point on. So we really need to see some momentum picking up after breaking out of this channel to actually, you know, believe in that scenario. Okay. Regardless, you know, as I said, ideally I favored one more push to the downside. So I mean, I would be more inclined to be selling this if we actually had a break below this trendline support. But regardless, you know, we have to respect this breakout, because, you know, when the market is oscillating in a roughly a range for so long, I mean, what is it now, 5 months roughly, you know, you really cannot dismiss whatever happens from here just because you would ideally wanted to see it move in the other direction. So definitely this is something to watch out. And, you know, the next few days, today's close is going to be important. The next few days are going to be also important, because we need to see if the market is also going to treat this as something important. In essence, if people are going to step in believing in this breakout or not. Now, equivalently, Euro Yen is struggling. No surprise here. We talked about it yesterday, that you know, this retest of the 130-150 zone is going to be important, because that was an area of support for a big period of time. So it makes sense that the market would at least struggle retesting it coming from the downside. And you know, this area is going to be important. It's also something to watch very closely this week, because it's going to tell us if this is just like a short-term rebound or something more than that. Obviously, as long as this area is holding, you know, you should respect the downside, and you know, a potential for another move lower towards the 128.50 to 130 to 129 zone. But if we break above there, the situation obviously becomes again more complicated, right? So Euro Pound, Euro Yen, USD Yen, S&P at very critical junctures. And I'm saying that to advise people that perhaps this is not the day for people to be stepping in and trying to establish fresh positions, because I think with so many instruments in critical junctures, probably, you know, my idea is waiting for a little bit more of a confirmation of what's happening here, and what the market wants to tell us and what the market wants to do, you know, before getting more confident in building a new short-term thesis and trading based on that. Okay, so that's my whole point here. So let's have a look at a few more instruments, and let me open the question box as well, because we might get a few ideas from there. So let's see. Hi, Steve. A short-term view on Stelios's pound Kiwi pip would be appreciated. Why don't we let Stelios do that? I can clearly do an approach from a technical analysis perspective, but Stelio, are you back, mate?
Yes, I am here.
Okay, so as you see, we have a question which you'd rather answer first, since it's your pattern in play. We have our friend Christian here asking about your pound Kiwi pattern in play.
Sure. Well, this is something that I've been looking at for a while now, and in fact, I had a pattern in play earlier. Was it this year or late December? I don't remember, which I closed as it went from 190 to like 194. The rationale behind this is there's two aspects. One on the UK aspect, I'm of the opinion that first of all, the Bank of England will have to act a little bit more than the market is expecting, simply because inflation is 3% and it's not going down. So they have to get away from this extremely accommodative monetary stance. Now, obviously, this is a more long-term view that I have. I'm not a scalper, but I have identified, some nice technical entry and exit points. So on the UK side, I think this will happen by the Bank of England, i.e., they're going to be a little bit more aggressive than the market's currently pricing in. And I also think that the uncertainty related with Brexit, I've said this for months, that eventually it's going to go away. Eventually, there's going to be some kind of a compromise, maybe not the best compromise, but for both sides. But we saw this in the last couple of months. The whole rhetoric from both sides is a little bit more constructive. It's by no means done deal, or whatever they're going to do. We don't know, but it's becoming a little bit more constructive, simply because the UK economy is the second, third biggest economy in Europe. So it's in the interest of both sides to find some kind of a compromise which is going to be good for both sides. Obviously, the European side, they want to show that, look, it's better to be in the union rather than outside of it. So they're not going to go and say, whatever you guys want to the UK, you can have it. Obviously not. But I think, as I said before, there's going to be some kind of constructive progress. Now, on the Kiwi side, it's one of the currencies that I am bearish for this year. And there are a few reasons, but the main one is the recent change of government, which is a little bit more on the leftist side. I can't say the word, and a little bit more geared towards a weaker currency. And the RBNZ is one of the few central banks which straight away, as soon as there is any meaningful appreciation of the currency, straight away they come out and they're quite vocal about it. So in the medium term, that they're not going to let the currency appreciate, at least not significantly. So for these reasons, I really like this pair on the upside, and I've liked it for a while now. And I've been looking for entries to get long, and that was anything with the current market structure, anything below 190, I thought was a pretty good level to start getting long on that currency pair.
Now, from a technical analysis perspective, if we view this as a potential bottoming formation, like the triangle within these blue trend lines, then you can see that there is the potential that after having a breakout, that this can just be a consolidation before another leg to the upside. So I'm also inclined to be looking higher. Personally, I wouldn't be doing anything as long as we remain below between this blue trend line and this red one here. But I do see that there is a higher potential for a break to the upside. So as long as we remain above this low, I think that looking higher is the likelier scenario. I might personally get involved as well, since you asked my opinion. If I see a breakout from this trend line, because as you see, the market has already proved that this trend line is quite significant, because look at it, one test here, one test there, one test here, several tests here, another test here, another test here. So this trend line here is of importance. So if I see a breakout, and given this formation that I said, I'm also going to be, a fan of being long for at least one more leg higher in the pound kiwi. So that's my perspective from that's my view from a technical analysis perspective. Stelios already gave you quite a few of macro reasons. So I think now you get a more broad based idea on how this might move. Actually, we have speaking about indices before, we have quite a few mentions and questions about the Nikkei. I already said yesterday that Nikkei makes me feel that it wants to break to new lows more than other indices, and this remains the case. I mean, I believe that Nikkei is definitely one of the weakest links having to do with risk, and as you see, it was currently testing, like at the lows, it was testing like a major trend line, ascending trend line. And if we do move lower from here, I think that inevitably we're going to be testing the 20,000 area once again. So I do think that as long as this high that we saw a few days ago, what was it, 22,500 almost, a little bit lower, as long as this holds, maintaining a short bias makes 100% sense for a push to new lows. So that's my view, because we had several people asking about it. USD SEC, we also have two different people asking about USD SEC. Let's have a look at it. Okay, the problem with being bearish the USD SEC here at the moment, and I think it's quite obvious to whoever is looking at this chart at the moment, is that, okay, this was a nice area to get rejected, but the price action since looks awfully much like a bull flag. I mean, the price action so far, the last 5 days of price action so far, have nothing bearish to them. It's actually, if I go down to a 4-hour chart, I'm sure it's going to be more than obvious. There it is. Right, this is like a textbook bull flag. So although I would like to see the lower, at some point quite soon, and that's what we were looking when we found a low here, for perhaps for another push towards the 825 zone, and then a resumption lower. We did get a rejection from there, but that's why you always need to pay attention to price action and what's it telling you, because currently the price action is telling me that the area we were looking for a rejection did play a role, so it proved its significance because it stalled price action for now, but the market does not seem willing to go lower from here. So seeing this type of price action, I have to reverse my opinion in the short term and say that this market is likely looking like it wants to move further to the upside. So I would say that as long as, let me draw it here, as long as this high is holding somewhere there, perhaps you should be looking for one more leg higher, right? Because this looks like a bull flag to me. So that's what I think about the USD SEC. As long as it remains above 815, given this type of price action, I would be very, very careful, because it looks like it wants to move higher, not lower yet. So, you might have a trading plan in place, but you always need to keep an open mind and try to read the market for what it says and not for what you would want it to say. In this case, the market doesn't tell me what I wanted to hear. So, I have to listen, right? So not ready to move lower yet, at least not from what I see here in the last 5 days. Also, you can see here from the RSI that, it's just a little correction in the RSI. So unless we see some dramatic move lower in the dollar like the next few days, and that takes USD SEC with it, I remain very skeptical that the market is ready. Probably it isn't. 1% stop loss Dale every time, but I hear you loud and clear. ECB and BOJ tomorrow. Just short-term dollar has to do, but chances are the dollar turnaround will be violent. Second half of year. Yeah, on it. Yeah, I'm with you. I believe in general that this year is going to be a very interesting year, and yeah, we might see a lot of that happening in the second half of the year. There's no question about it. If we make it to summertime and conditions are still quiet, we might get like a couple of months of peace and quiet, and then get more action. Starting on August. Usually August can be a volatile month. Nikkei broke down. Yeah, we spoke about the Nikkei, Abdul. What do you think of USD CAD before BOC? Joe is asking. Okay, that's a good question. Let's have a look at the USD CAD. Okay, first of all, I have to say that the USD CAD is still following this ascending channel. We did get rejected. We got rejected from the 130 zone, which makes sense. I mean, that was a quite important resistance. You can see it here. It has been supported in the past several times. But I do believe that the price action also here for now doesn't tell me that the move higher is done and ready. And something, even if we see a little bit of a move lower from here towards this area, I'm still not going to be 100% convinced. As long as we remain above there, I would ideally want to see another leg higher towards here, the confluence of the 61.8 and the A, B equals CD or ABC. It depends on if you see it from an Elliott wave or harmonic perspective, equality. So ideally, I would want to see this area tested, and I would really want to be short somewhere there. As I said, my trading plan is in place already. I want to be short half a position here, and then I want to be short half, the other half of the position if we make it up to 133 to add there, or if we never make it up to 133 and we get rejected from there on a break below 130, once again, I want to add another half position. So that's my trading plan. Of course, there's never a guarantee that the market is going to make it up to 130, 130, but my intuition tells me that it will. So that's my trading plan about the USD CAD, and I've had no reason to change it since yesterday. So that's what I'm looking still. You on USD SEC, USD NOK. We already covered USD SEC, so let's have a look at the USD NOK. Okay, USD NOK. The NOK remains one of the strongest currencies, commodity currencies against the dollar. That's still the case. And something, I was viewing this as a triangle, but you never know with markets because it can be this kind of a triangle. You know what I mean? In a correction, you can never be 100% sure. And you can easily have to redraw this trend line because we definitely haven't violated this low here. Bottom line, for now, this market seems to be in a triangle. Now, if the triangle is this, and we've already broken below it, I kind of doubt it, by the way, because I would want to see stronger follow through. Or the triangle is this, and we haven't broken below it yet. It remains to be seen. Probably this is a more likely scenario. But one thing is for sure, NOK is quite strong against the dollar. And if I see a break below this low here, I will believe that new lows are coming quite fast. So I remain inclined to want to be selling this currency pair, and as long as this high is holding, that's going to be my bias. I'm not involved yet, though. I have to tell you that, right? I'm looking to be involved if I see the market behaving well, and as I said, I would ideally want to be looking to be involved on the downside. So even if this triangle breaks to the upside, I'm going to be viewing this as a different corrective pattern, and I will still, it doesn't mean that I'm willing to buy it. I'm still going to be looking for other opportunities and another technical formation to be selling higher. So I want to be short the USD NOK. If it plays out right, might be happening soon. If I get convinced that this is a triangle that's breaking to the downside, otherwise I might do it, from my higher position. Let me see. Aussie yen, pound yen. Okay, DAX. Oh, we have quite a few questions. Okay, let's have a look at the DAX. Okay, listen. I said it 2 days ago, and I insist on this opinion. The DAX is the one that looks best to me because we satisfied the condition that I wanted one more low. We found this very nice trend line, which is quite important ascending trend line. We had some very nice RSI divergence. You can see it here in the reliable one. Let me also mark it so it's very clear. RSI below 30, RSI above 30, while the market clearly made a new low. This was also a horizontal area of support. So I think that if I really had to fade one of the indices having to do with weakness, it would definitely be the DAX, right? So I'm not saying that you should be bullish the DAX, but I'm saying that if you want to be bullish one index, I think the DAX should be it, right? I'm not long, but if somebody told me you need to buy one index at the moment, go ahead and choose one. I would be buying the DAX, no questions asked. Now, having said that, I understand why somebody wants to maintain a bearish bias as long as we remain below here, right? 12,600, an important area. As long as we remain below there, obviously, it can keep moving lower. There's no question about it. But as I said, in comparison to other indices, I like the confluence of supports it found here, the 38.2 of the whole move higher, the ascending trend line, and the horizontal support area, and the RSI divergence, right? So 4 different reasons why 2 days ago, plus if you want to add the candlestick, this huge outside white candle. So, 5 different reasons why somebody can argue that the DAX can rebound further from here. Okay. Aussie yen was the next question. So let's go ahead and have a look at it. Whoop. There we go. Okay, I said yesterday that, listen, the rebound looks very nice. It came from a very good area, but we are currently testing resistance. That were my exact words yesterday. So this is not the time to be buying it because this is the first area of resistance and we might get rejected from there. We did. Now, it remains to be seen if that was a short-term rejection and there is at least one more leg to the upside. But one thing is for sure, you cannot possibly be bullish as long as this area is holding as resistance. And the same applies to the Kiwi yen, because it did the exact same thing yesterday. I showed this. It was testing this resistance area. It also got rejected for now. So, we got a 2 days reaction in both these currency pairs, and the reaction came from very important zones in both cases. But have they confirmed that they're undergoing like a big reversal? No, not for now, not yet. So, in my opinion, you shouldn't be jumping the gun. You should be aware that, they might be trying to put some type of reversals, but they absolutely have not confirmed it yet. Okay. It's our pleasure. Many people are thanking for several types of analysis we covered. I mean, that's why we're here. Crude. There we go. Crude is in the usual tedious spot that we've mentioned many, many times, that you can be very sure about a move while it's unfolding to its impulsive side, but you can never be certain in advance about the nature of a corrective move. So, for example, the question here still remains: is the correction done with a move to 58? Is it perhaps the move to 58 part of a, let's say, triangular correction? Might be. Is it the first leg of an ABC that will lead us towards the 55 before moving higher? Might be. Nobody can tell you in advance the nature of this correction, right? Is it going to be this? Is it going to be this? Is it already done here? Likely not. So I either see a triangle here or an ABC. Triangle looks more likely. I can tell you one thing with absolute certainty. I remain bullish in the medium term. So is it a triangle? It can be. A break above this high will lead to new highs. Is it an ABC? To confirm that, we need to see a break below. Let me clear it. We need to see a break below there to give more probabilities to the chance of moving towards the 55 area before seeing a bigger rebound. I can tell you one thing for sure. No matter which of these scenarios plays out, I still believe that a new high is coming in crude. Okay. Let's have a brief look at the metals. Gold still holding within this large formation. In my opinion, a high chance that this formation is going to break to the upside. But you know, the situation remains that gold has been extremely choppy and not to be really trusted. Blake already talked about silver. The fact that silver has been extremely range bound and choppy can be testified by the 50 and the 200 DMA. It's very easy to understand when something is choppy, and you should probably not be trading it, because look at the 50 and the 200 DMA, how much converged and horizontal they are. Usually, when you see slow and faster moving averages be horizontal and close to each other, it's the absolute mathematical proof that whatever you're looking at has been doing roughly nothing, right? And this is the situation here as well. On the other hand, I'm happy that palladium, which is the one I'm trading, has kept playing ball, and it seems to be breaking lower from this bearish formation. So I'm still looking for my 910 level, and I think it might actually get there. So I still think that palladium looks much cleaner to trade, having to do with metals, and copper the same. It's moving lower, but I still think that this is a corrective formation any way you look at it. So I do think that at some point it's going to find a low as well and move higher from here. Yeah, I agree. Also, again, as I said, it does still look bearish. There's no question about it. Better to long DAX than Dow Jones, in my opinion, Abdul. Yeah, it looks more clear to me. Yes. If I had to be long one of the two of them, it would definitely be the DAX, unquestionably.
We have JT with us.
Okay, I'm really looking forward to hearing JT. So enjoy the interview.
Thank you, Steve.
Okay, see you everybody tomorrow. And as I said, be careful. A lot of instruments, a lot of important instruments having to do with correlations, etc., are in critical junctures. And if we get some volatility today, we might get a much better idea of what the market intends to do from here. But as I've said, it's no shame to staying a little bit on the side and letting the market give you more clarity before you trade. I mean, not all weeks, not all days, not all periods of time are ideal for you to be stepping in and establishing new positions. Right, Dale?
Tom Petty said the waiting is the hardest part.
Indeed. But the most important one as well.
Yes. Yeah, it has to be compelling enough to slap me in the face.
Yes.
Okay, buddy. Thank you, Steve. Thank you, Blake. Thank you, Stel. Nice analysis today. And what a great day to have a FACE member come and talk to us about his journey. JT, you could turn on your mic now and we could talk. Looking forward to learning about you.
Dale, do you hear
Nice
me?
to meet you. Yes, I can.
Oh,
Nice to meet you, JT. So I know,
great.
I know JT.
Great.
Yeah, I know JT's your handle. What's your name?
My initials are JT, and my name's John Thomas. That's what
Okay.
JT stands for. John Thomas.
All right, John. John, so, I don't know you well. I've seen you in the, we probably exchanged a few texts. I think that maybe you talked about that some of the things I taught with 3 drives you've integrated into your trading.
Yeah,
I'm
definitely.
I'm just trying to get a handle on who you are. So I do remember exchanging some messages with you in the chat room. So why don't we start from the beginning and tell us what led you into the trading business and how long you've been at it, and did you have mentors, or a little bit about your journey, John?
Yeah, sure. That's great. So I was about 23 years old, and I started day trading. I got an idea from a friend, and that didn't go well at all. That was back in about 2007, and then I wasn't good at all. I thought it was a get-rich-quick scheme, and I didn't have much training at all, and I failed miserably. Then I got into Forex because it was 200 to 1 leverage at the time, and that was a mistake also.
Okay. Yeah, I kind of remember that era, 2007. I think everyone was a day trader. It was the same as 2000. And
Right.
What happened is, if their day trade didn't work, they turned into a scalper, and then because they were waiting for it to work, and then a swing trader, and then that day trade became a position trade, right? So
yeah. And then it becomes a big loss. Eventually, a really, really big loss. Because at the time, I didn't know how to take losses. I was only worried about making money.
Right. Okay. So what allured you to Forex was actually so dangerous, was 200 to 1 leverage. So did you go in there and leverage every buck you had and tried to trade it that way?
Well, yeah, right. Pretty much, I was trying to make, $200 or $300 a day, instead of an income with only using. Well, at the time, I think €1 lot was $50, like one standard lot, or $500. I forget. 200 to 1 leverage, and that eats your account really, really quickly. So I wasn't successful at that either. So I would go. So I got a full-time job, which allowed me to trade part-time. So now I was only supplementing my income. So I would say fast forward to 2010, where I actually found Blake on Twitter, and
cool.
I would listen to his tweets and stuff, and some other people tweets and Twitters and stuff. And in 2010, I actually had a really good year. Well, a really good 6 months. Nothing could stop me, right?
Did you go into his room when he was moderating for Wise Trade? I mean, I know you saw him on Twitter, but, huh?
Yeah, not at that time. I found him in 2014.
Okay.
In the Wise. So in 2010, I had a really, really good 6 months, right? And nothing could stop me, and that was even more dangerous because I was just winning trade after winning trade after winning trade, leads to more leveraging and more winning trades and stuff like that. And then the summer of 2010, I blew the entire account, in like 3 trades. Because now, I wasn't used to taking losses because I was so successful in my trades. And so that was
that's an interesting one. That's almost, you get hubris, where
right.
I actually tweeted about it. So this was the example. When people have windfalls, and I know you treat it differently now, John, but I tweeted that when people have big windfall profits, they tend to get sloppy because their mentality is, well, I'm trading the house's money. But you know what? It's not the house's anymore. It's yours, and respect it and protect it. So that's kind of what happened to you. You were, infallible, so your ego wouldn't let you get out of the way, and you fought something, and only 3 positions wiped out 6 months of work. How did you ever come back from that? mentally and emotionally? I'm not even talking about financially. What did you go through after that? Did it affect your demeanor? Did you feel depressed? Did you bring it home with you? And what did you do to recover after going through an experience like that? You are a persistent son of a gun. So how did you do it? A lot of people would have stayed in a fetal position and never came out of it.
Yeah, so it definitely was a bad time. Like, there was definitely times where there's arguments, you know, with the wife, or I'm not a happy person at home because I can't believe I just did that. Like, I was on my road to success and then I just crashed. So the mentality was definitely a dark place. And so the way I got out of it was just I said, hey, if I did it in 6 months, I could do it again. Right?
Great attitude.
But, right. So, and I just kept going at it. Then fast forward to 2014 when I started listening to Blake's webinars, and that's when my entire perspective changed. I was looking at everything all wrong because up until then, I was only in it to make money and to make profits, which is still the end result now. But Blake's perspective gave me just risk management, and I never heard that from anyone before. You know, all I had to do was protect the money I made, and that changed my whole mentality. So
what a great mentor, and it's such a simple yet difficult thing for most people to do. So what steps did you take? You never traded without a stop after that, or how do you manage risk nowadays? You don't trade unless you're in front of the screen, or you do use hard stop losses in your trading.
Right. So I as of right now, even the past couple of months, I've grown a lot. Like my account is really positive, and the chat room has a lot to do with that, and the whole Face community has a lot to do with that. So now, because I am only a part-time trader, like Blake mentioned before, my goal is to become a full-time trader, but I do have a day job. So I do use really, really tight risk to reward. Like I do use hard stops, really only 30 to 40 pips, or, you know, I have a calculation based on maybe if I have a wider pip range, then I'll go in half-size position.
Okay, so, let me ask you, what time frame do you trade off of using 30, 40 pip stops?
Usually I don't look at daily too much, but I am aware of like the daily trend. And then I go down to the 4 hour and 1 hour to see, like, you know, what I used relative strength. I used the 3 drive to see what direction we're kind of trending in. And then because my stops are so tight, I wait until like a 15-minute confirmation to really, really drill down into the entry. So to be honest,
so
it's really
is a confirmation a 15-minute candle, reversal signal, or something like that to give you confidence for the entry, and you wait for the candle to close?
Yeah. So sometimes I do wait for the candle to close. Sometimes I wait if it's at my level, like a previous horizontal resistance or support. Anywhere where I think that it's got to turn here, you know, that I only need to give it 30, 40 pips, because then I know I'm wrong. You know, that's what you need to do. You need to know where you're wrong and just get out of the trade.
Okay. I know a lot of people have difficulty with being right the market, wrong the trade with tight stops. Does that happen to you often, using 30, 40 pip stops where you'll get picked off and then the move you're looking for happens, but without you?
Yeah, so that happens all the time. I was about to say, the way I trade at times can be really, really, really frustrating. Like, I miss trades all the time. I miss wins all the time. I get stopped out and then the market reverses. But at the end of the day, well, not at the end of the day, like over longer term, at the end of the week, at the end of the month, I didn't lose a lot of money. Even if I have bad weeks, I'm not losing a lot. And then it only takes 1 or 2 trades to recoup my losses, because when I do hit a trade, it's at 4-to-1 risk to reward, or, you know, 3-to-1 risk to reward.
Okay.
So
you've been at it in different ways for what, would we say 8 years? Didn't you bring up 2010 when you tried to day trade, or 2007? Okay.
right.
Yeah, so
really,
you've been at it 11 years. Okay,
Yeah.
so how, and mainly part-time, because
Right.
and you know what? I'm also a believer in having more than one revenue stream. There's only really a special breed of person that doesn't make trades too important if that's his only source of revenue or her only source of revenue. Most people tighten up if it's life or death to pay the mortgage on a trade. So you may end up finding that you like having a job. It may not be the same one, but another revenue source takes the heat off you and the pressure of every trade having to be life or death. So you went into Wise Trade, and would you say it took you about 8 years to finally get it?
Yeah, so I was a failing trader for about 8 years, but I was like always on the brink. Like I always had flashes of 3 or 4 months where I knew I could do it. So
Right.
that's why. So what I'm going to say is, I think to me, the trading part is the easy part. Reading charts is the easy part. Analysis is the easy part. It's the mentality and actually executing the trade. That's the really, really hard part. Like you said, you could think you're right, but the market, and you could be right, but the market goes against you because they say, what's the term? The market can stay crazier more than you could be right, or for longer, or something like that.
Oh yeah,
So,
manias. Oh, with manias, yeah. Manias could last longer than your solvency, and
right.
Anyway, so why don't you tell me about? You mentioned that things have really improved for you being inside the member chat. So I'm interested in what happens in there for people that aren't in there currently, and I'm going to bring it up here. I'm going to put you guys on the Jumbotron. What happens in here that gives you an edge?
So it's a really good place to talk about like-minded people with the same goals, because I don't know if I mention the Forex, anyone in my personal life, they have no idea what it is, or they think it's gambling, or they think that I don't know what I'm doing and I just get lucky. There is some kind of strategy that goes into it, and the people in the chat room, that everyone is really supportive, and we throw ideas around all the time. Like you say all the time, we're on the same team. So yeah. I might not see something, and somebody else posts a chart, and then I look at it. Not to say that I don't copy anyone in the chat room. I don't think that's a good strategy. But if someone posts a chart that I'm not looking at, and then I see something on that chart, and I make my own decision whether it's a sensible trade or not, and that's really great. It's really great to have a community that we're all working together with the same goal.
Yeah, so it's your family. Do you find that there are certain people within the chat room you ever discover that maybe you have an idea? Okay, Simon just put up a chart of CAD here. Looks like a nice short. That, say for example, you're thinking about shorting the euro, and yet one of the traders that you really respect has another idea, has been in the room around, I say surround yourself with traders better than you. Has any of the people in the room that you respect saved you money by you thinking twice about taking a trade that they were on the other side of?
Oh yeah, that happens almost on a daily basis, where maybe it happened actually last 2 weeks ago. I had a pretty bad week, because that was the week, maybe 3 weeks ago, the week where euro yen just kept going down and dollar yen just kept going down, and I just kept trying to fade it and buy bounces. And pretty much everyone in the chat room was, shorting rallies, and it made me stop and think about it. And I saved myself a good 2 or 3 trades of 30, 40 pip losses just by taking a step back and looking at it from a different angle, and saying to myself, well, what is 20, 30 other people seeing that I'm not seeing, that I want to do something different than 20 other people.
Okay. All right. So how long have you been in the private chat? now?
Since it started, maybe was it last August or July? 8 months.
Okay. All right. And do you ever glean anything from interviews that have helped you in your trading? Ever find somebody there that you have decided to maybe follow or subscribe to, and they've helped you?
Yeah, I'm not that active.
Fine answer.
Yeah, your interviews. I'm not that active on Twitter. I listen to the interviews for more of like mentality-wise perspective. Okay. And I try to because every trader is different. So some strategy is not going to work for me. I have my own strategy that are parts of other people's, but I really like to hear everyone's stories because that they're success stories. Everybody didn't start making 200 trips a day or becoming Forex millionaires. Everybody started from somewhere. And to me, that's really interesting.
We can learn from everyone, can't we, John?
Right. So
let me ask you: do you have anyone you could remember that was a favorite guest of yours? I'm just curious. I'll invite them back. Do you have any?
Well, I know a couple of months ago, maybe early last year, you had one guest, 50 Pips. He's on Twitter, 50 Pips. And
oh yeah, 50. Yeah. Okay.
He talked about the same things, like surrounding yourself with like-minded people, and his mentality was great. Because his style was more like mine, where protect your stops, don't lose too many pips. Like maybe you don't need my style itself. I don't need like a 200 pip stop.
Okay. Who's your best friend in the chat room?
I'm definitely gonna have to say right now it's Nidish, because Nidish helped me a lot last week.
Oh, wow.
He's always there. I don't know how he does it.
All right. Well, there you go.
Yeah, Nidish.
So, there's a testimonial for people. All right.
Helps me a lot.
And your favorite mentor, let me guess, it's I'd say probably Blake Morrow.
Yeah, well, he's the one that started it all. So.
Okay. All right. What do you think about Volgi?
Volgi.
Huh?
So like Steve and Stelios.
Yeah. Both of them. Yeah.
Yeah. So their trading style is completely not like mine, because they're more long-term traders. But
okay.
I definitely listen to them for the trends. Like,
okay.
Do
you pay attention to Greg's work on the site?
I'm not really an Elliott Wave person, so I try to stay away from that because it clouds my mind.
Okay.
But,
all right. Well, you know what? You did not sound clouded at all during this interview, JT.
Oh, great.
I want to thank you a lot for sharing your story and your testimonials about how Blake helped you, and God, the difficult road that you traveled for 8 years and never giving up. An old veteran like myself, his name was Jake Bernstein, said that what makes a winner is something called stick-to-itiveness, and you definitely have that, John. And congratulations on your perseverance, and so glad that things are working for you, and you're a great part of the ForexAnalytix family. And brave, because most people fear public speaking almost as much as death, and you weren't afraid to share. So thank you very much. Yeah, thank you, my trading warrior brother. Appreciate you. In football, a great line knows how to fill the hole, and you did it today. So thank you so much, JT. All right. And that's it for us today, Face. Thanks for sticking around. Tomorrow's investing.com. I have Michael Lamoth with me. Michael's pretty famous, has about 50,000 followers on Twitter. So we're looking for a great day. Trade well. And remember, most of all, just like John, felt blessed by, finding Blake and finding face and finding the private chat room. All of us here at the ForexAnalytix team feel blessed by the support of thousands of enrollees in our free seminar, our free webinar, and the hundreds of people that have supported us by subscribing as we're headed towards a 1-year anniversary of FACE. So don't just count your pips, count your blessings, everybody. See you tomorrow. Adios. Thanks again, JT.
Thanks, Dale. Bye.